Who should pay what level of taxes is a common debate in wealthy democratic countries. Calls for the rich or big business to pay more are also very familiar. But mostly those conversations leave out some important context, that those countries exist within a global economy and thus an international tax system. Allison Christians is professor and chair of tax law at McGill University and co-author of a new book that argues it's time to take that more seriously. The book is called Tax Cooperation in an Unjust World. And Allison Christians joins us now from Montreal, Quebec for more. Professor Christians, great to see you again. How are you managing tonight?
Very well, and it's great to be with you. Thank you.
Not at all. We've sort of hinted at what the premise of the book is, but why don't you put a little more flesh on that bone? Why'd you write this and why now?
Well, why'd I write this? Because I think we don't think too much or deeply enough about what it means to be interconnected in a global economy when we're thinking about our tax system. We're often just thinking about our own domestic concerns, but always our tax system builds up and functions within the context of a larger global tax and trade system with a bunch of rules that affect us and our decisions affect others. So that's the sort of context of why I think that we need a book to think about what are the normative concepts in how we design our tax system in the context of the economic situation. And why now? Well, I always write about tax law and I always think about tax law in the international context, but now the world has kind of joined me. Canada and 135 other countries are in the midst of talks, global talks about whether there should be minimum taxes on a global basis, especially for large multinationals. So the book is in a way responding to that conversation that we're already part of.
Well, I don't know if you sent a copy of your book to Joe Biden, but apparently the president thinks enough of the idea that he's proposed something just yesterday. But let me get you to weigh in on I guess one of the main points that you're trying to make in this book, which is that wealthy countries have, let's put it this way, they're claiming more wealth than they may morally be entitled to, which of course raises the question about what do you think they're morally entitled to or not. Can you weigh in on that?
Yeah, so it's a complex idea, and it's not everybody's cup of tea to sit around and think about the moral imperative of the economic system. But what do we think we're entitled to when we're building a tax system? We think, well, we can tax our people and we can tax our companies. But when our companies go overseas, can other countries tax them too? And if other countries tax them too, what should we do in response? We sort of think of ourselves as entitled to the income that arises in Canada, for example. And we think, well, if you come to Canada and you do business in Canada, we ought to be able to tax that. But we've seen in the last decade or so, lots of companies coming to Canada that we haven't really been able to tax. And I think among them, the big platforms have been in the news on occasion that we've just struggled to tax these companies. And the same struggle is being felt by other countries when our companies go there. And so the impetus of all of this idea of, well, what are we entitled to tax starts with the idea that the nation state is a body with legitimate power to tax. And then the question is, how much do you have to cooperate with other nations when you're already cooperating on trade and capital flows? How much do you then have to cooperate on tax? So in the book, we talk about this idea that the state is in some way entitled to tax the people, the companies that operate in the jurisdiction. And that's kind of something that people accept. But then the thing that's sort of harder to explain or harder for people to come to agreement on is, well, but when two states collide, when they both think that the taxpayer is operating in their jurisdiction, what are our obligations to deal with each other, to cooperate with each other? And that's really the question that this book is trying to get at. Come up with some kind of idea about, well, what are the terms for our cooperation when we go and talk to other countries and make agreements about what the tax system should look like.
And why do you think that's been such a tough nut to crack for so long?
Well, I think because justifiably, when people think about taxation, they think about what they are paying to their own government. And it's really hard. It gets more complex the more complicated you think about, well, which taxpayers are paying what tax to which countries. It's really hard to keep that in focus when you're concerned on a daily basis with your own tax situation. So it might be easy to say, well, I pay taxes as an individual, but the big conglomerate beside me is not paying tax, and think, well, that's unfair. They should pay tax too. But it's a little harder to say, but to which country should they pay tax? And how should we go into negotiations with other countries? Like, is it okay for Canada to go into a negotiation with another country and just say, well, this is our term, these are our terms, take them or leave them? Or is it okay for Canada to create a agreement with a few countries, but then treat other countries differently? Is it even okay for Canadian businesses to go into, for example, conflict zones or post-conflict zones and start operating there and producing income that country can't tax? Just how should we think about those things? This really feels remote to you when you think in terms of your own situation in the context of your daily life. These are hard questions to try to answer.
Indeed. But do you accept the premise or the notion that if there were, say, a minimum corporate tax or even a tax on billionaires, that every country in the world, for argument's sake, signed on to the notion that it ought to be in place, that there would be a lot less shopping around for lower tax jurisdictions by companies, and there would be more tax fairness in the world? Do you buy that?
Yeah, I mean, this is the idea, right? And in the book, we kind of go through why it's hard to get to that place, because you can make a commitment to minimum taxation, but then you have to think about, well, minimum taxation on what base, and how do you decide who decides what constitutes the income to be taxed, and then how do they divvy it up? So there's always some difficult coordination problems in that. But yeah, the basic idea is, if the big countries like the US and collectively Europe, if they start taxing at a global minimum rate of 15%, then it makes it easier for other countries to also raise their tax rates to that amount. And when those big countries don't tax at a minimum rate, then what we have seen in the past is what they call the race to the bottom on corporate taxes, where each country tries to lower their tax rate just a little bit to attract the capital there. And so this is a backstop idea where if you just have a minimum by the major economies, then smaller countries, smaller open economy countries can also follow suit. And then it makes it less lucrative for tax planners to look around the world and look for a lower tax rate somewhere, because it simply doesn't exist. There's always this backstop. That's the idea, the general idea.
Well, let's really get into the weeds here, okay? This is going to be Tax Policy 101 here for some of us who don't follow this as carefully as you do. The notion of double taxation. What is that, and why do so many businesses have a problem with it?
Yeah, so we can picture a Canadian company starting out in Canada and paying taxes to Canada, and on the whole, not objecting too much to being a taxpayer. They benefit from the system in Canada. They use the roads and the transportation and the communication infrastructure that we built for them. So they pay back into Canada. We think that's good. Now this company starts operations overseas. Well, Canada says, well, it doesn't sort of matter too much where your income comes from. We think, you're a taxpayer here, you should pay tax here. And the company says, yes, but I'm also paying tax in that other country. So now I might have the same income, two different countries saying that I have to pay tax to them, and it's double taxation. So that was a big problem for a long time. In the history of taxation, countries have always tried to solve that problem with tax treaties and agreements where they decide, well, one country will tax and the other will not, or they'll credit one tax from one place to the other. They sort of work that out. But then somewhere along the way, when you start getting favorable tax incentives in some places, low tax rates, what started happening is that it got easier to find a place where you could go where they wouldn't tax it. And then we also wouldn't tax it because we had our own incentives and our own deductions. And all of a sudden you had companies that if they went to certain places, they could avoid tax in Canada legally, and they could also avoid tax in that other country legally. And sometimes that was intended, but sometimes it wasn't. And when we say it's not intended, that's not what governments really want. They sometimes call that double non-taxation. And you could just call it non-taxation. Let's be clear. It just means no tax. But the reason you might call it double non-taxation is because it's usually the product of tax agreements that have been coordinated, that have been agreed to. So the governments have agreed to some kind of deal, and then as a result of that deal, the taxpayer found themselves in a favorable place where they had to pay no tax to either country. Whether you should fix that has been a question that has bothered global tax policymakers for many years. And not everybody agrees that you should fix that.
Well, you've anticipated my follow-up, which is basically if nirvana is a situation where all the nations of the world agree on what a fair and basic tax rate ought to be, and they cooperate accordingly, how far from nirvana are we right now in your judgment?
Well, we're still pretty far. Even though I think we have the right ideas. So we're closer than we were 5 years ago, I'll say, in the sense that you hear policymakers and politicians talking about minimum taxes and relating minimum taxation to the concept of fairness and fair taxation. So that's a good step in the right direction. But I think we're still pretty far because, of course, it's really complicated to think about global tax in the globalized economy. It's really hard to kind of wrap your hands around what that actually means in practice. And as a result, you have it's easy to talk about a minimum tax, but it's the devil's in the details as always. It's a lot harder to see if we actually are agreed on what we mean when we say that there should be a minimum tax.
All right, as people in Canada, people watching this or listening to this right now, consider the rate of taxation that they are paying right now, how does the international situation that you've described affect all of that?
Yeah, so I think for most people, the idea that companies should pay a basic minimum rate of 15% might even seem low to them. I think for a lot of people who face a tax rate twice that or more might think 15% seems low. And then some people might think, no, you shouldn't have corporate tax at all. So there's certainly division in terms of how people understand the corporate tax. But I will say this, the revenue projection is that if you can sort of lift the bottom so that there's a basic minimum rate, then maybe you come up with revenues that will pay for public programs that we want. And so that could be a game changer in terms of funding social programs that people want. This all is still conjecture, though. We have to wait and see if we get to a place where those new revenues are, in fact, in our hands. But you can see politicians, already anticipating those new revenues. You see it in budget projections that, new revenues bring the possibility to pay for new programs. So there is a connection between, these big ideas of international tax and what's coming out of your wallet and what things cost in Canada. It's just a long and fairly convoluted path from one to the other.
Well, let me give you a for instance here, and you tell me if this makes any sense. Let's say I'm a taxpayer in country X, and I like the way that country X has set up its tax system. I think it's fair. It obligates me to pay certain taxes. I legally avoid what I can, but I don't evade illegally what I shouldn't. And then I see country Y over there, and they don't have as nice or as splendid a tax system in place. And I start to ask myself, why should I pay additional taxes to deal with their unbalanced situation when I'm doing everything I should be here in country X, playing by the rules, etc.? What's the answer to that?
Yeah, well, I think it depends on why you think country Y is behaving in the way that it's behaving. Is it behaving in that way because it's trying to take advantage of, your country's good tax system? Because that might provoke a response that says, well, we need to get cooperation so that everybody's working together to get a strong tax system. But if you think country Y is acting that way because they can't produce the kind of tax system that we have in country X, where maybe country X is Canada, and we have a very sophisticated tax system, we have very capable people, thinking about the policies for Canada, but maybe country Y doesn't have those resources. So another theme of this book is to think about that problem differently, to think about country Y. If country Y just simply doesn't have the capacity to build the same tax system, then they're not trying to take advantage of Canada. They're trying to they're trying to produce their own economic growth and fairness within the confines of the resources available to them. And in that sense, we shouldn't work against country Y, or we shouldn't think that country Y is a bad actor, but instead we should be building a system that makes it possible for country Y to achieve their goals without undermining our goals for our system. That's hard, but that's the point of this global minimum tax as well.
And I take your point, but what if I'm the finance minister of country X, which again thinks it's doing everything fine, realizes the problems country Y has, but we think we're doing it right here. And I, as the Minister of Finance, just happened to note that my deficit last year was $385 billion. Oh, and country Y would like a change in the international tax system because their deficit's probably even worse. But frankly, I don't care that much about country Y, and none of my electors are in country Y. I'm worried about how I'm going to pay off that $385 billion so my grandchildren and great-grandchildren aren't paying higher taxes for the rest of their lives. How do we fix that?
Yeah. Yeah, I mean, I think this is exactly where the global minimum tax discussion comes in. That is, one of the reasons that you might have a problem funding your government at the rate that you want, as a deficit, as you described, might be because you haven't been effectively able to have the tax policy you want, not because you're not capable of doing it, but because globally you're not competitive if you create the tax system that you think you need to fund your social programs. And so the answer to that is not more competition. That's what drives down tax revenues. Instead, it is this idea that through cooperation, we build a bare minimum floor, and that makes it easier for us to raise the revenues we need as well as other countries. So the idea of the global minimum tax is to curb countries that aren't taxing enough to the extent that that action affects the countries that do want to tax more. So we're sort of being a little bit abstract here. Maybe the way to say that is this: if Canada, has a budgetary need and can't find the revenues because all of the capital has moved offshore to find a lower tax rate, a global minimum tax is designed to change that idea, change that ratio, and so that capital isn't always looking for, a lower tax rate somewhere else, but just settles in at paying what we consider to be a modest, relatively acceptable amount of tax everywhere they go, which the world has decided right now is 15%.
Okay, when described that way, that makes more sense to me. However, let me flip over the coin and talk to you about the other side of the coin, which is, in my experience, every time a government tries to bring in a minimum tax, particularly on the richest citizens, it never realizes as much revenue as they think it's going to. And you allude to this point in your book as well. These taxes just don't, they got lots of bark, at election time, and they look good for politicians, but they don't have the bite. And frankly, the richest people always figure out a way to get around them. In which case, is there really a point to all of this?
Yeah, I mean, I think this is the good question to ask. So I think when it's every country for themselves, and it's a mostly competitive environment where other countries will lower their tax rates to undermine our tax rates, then there's no winning this game. So any one country that tries to tax the rich, let's say, whatever that term might mean in your lexicon, any one country that tries to tax a certain population will find that population will be able to wiggle away, if you like, will be able to go find somewhere else that's more favorable in a lot of ways. But that's the idea, that you have to cooperate in order to make it less possible, less feasible for taxpayers to just go find somewhere else and stop paying tax where they live. So that's the idea. But as we said, we were talking about nirvana and how close are we? So we're getting closer to seeing that no one country can act alone and be successful in this world where we've economically integrated. We're one seamless world economy. No one country can just simply act on its own. But certain countries can act, and their influence will make other options available for other countries. So I don't know if Canada can by itself just simply start taxing wealth in a way that's going to be effective. But if Canada is joined in that effort by a number of other countries, then that makes it easier for everyone to get the policies that they want in place. But it doesn't make it easy. It's just easier than it was when one country was simply acting on its own. Capital just moves around.
Right. So in our last,
Response.
gotcha. In our last 20 seconds here, then, how about this? This sounds impossible to achieve, what you have described. Then again, so would have been countries which used to go to war with each other on a fairly regular basis, all sharing the same currency, which is now the case in the euro. So the art of the possible here. How long do you think it'll take?
I think with a lot of, as with a lot of situations involving economic policy and normative policy, the normative policy of fairness, there's not an end somewhere in the future, but rather it's a path that we're always on and always revisiting the terms thereof. So I think, are we closer to getting to a place where we can say we are doing better than we were 5 years ago, 10 years ago on this? I think we are. And in 5 or 10 years, will we say we've accomplished something that we hadn't before? I don't know. There's a lot of backsliding when it comes to creating policy because the context changes. So what makes sense to some countries today might not make sense in 5 years. And I don't know if we've moved forward or moved back or maybe stayed in the same place. But what's important, I think, is that the more we talk about what really should drive our policy, it's economics, yes, but it's also fairness. That fairness is a factor when we're thinking about what our tax policy is, and that our global situation is, we can't just ignore it and just say it's just us. We have to think about what we do in relation to other countries. Then there's a possibility that we can make better policy as a result. That's the hope of the book. I think that's the hope of the global community right now. It doesn't really give us a good timeline, because I just said it's forever, but I think that's the right answer.
Well, I don't know anybody who's better able to explain what's on that path than you. And we thank you for not only joining us on the agenda tonight, but we remind people your book is called Tax Cooperation in an Unjust World, and we're glad that it brought Allison Christians to TVO tonight. Thanks so much.
Thank you so much, Steve.
The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism.